Excuse me. All right, Bruce here. Good late morning on Payday. My wide bit and my Misty hit early. I just about a half an hour ago was busy with Misty a few minutes ago and making Coney that I'm doing now, but I didn't see my Coney payments at Swab. But again, that's a small portion. My Misty was the biggest by far. Okay, so let me jump in here and get to the right page. Let's go to our June. We're now in June, so I've rolled the accounting for these guys. All right, so what happened? Let me get you the interday. A lot happened. You're going to look at this. And so basically they rolled, right? Instead of buy, sell short, which they did on the new 260s, because they lost so much before, they needed to roll their 230s where they had a lot of money. And I've been describing that. Usually they wait till Friday, but in this case it's payday, so they really needed to get more cash. So they did it yesterday, and obviously I'm reporting it now for the close of business from yesterday. So I'm just going to talk to it. There's a whole bunch on here. I'll show it rather than just show you this. Okay. So let's jump in here. So they took all of these, right, which is 25,685. And, sorry, this is the 25,685. This one was already closed. It confused me earlier. But this one, they closed yesterday, 6/4, day before yesterday, already closed out. Now, and they lost on that one, right? These add up to the 25,685. So they went out here and they had sold them for 3.9 on the bulk and 305 for this amount, and they paid 20.4 and $11. Okay, so they ate their lunch, right? Something where they collected 9.3 million, they had to spend 49. Now, in some fairness to them, right? These fund managers are following a prospectus and a script, 5 to 15%. Typically, in order, Coin doesn't have the IV that Mr. does. So it still has a high IV, but people want big payments from Coin and Coney, from Coney. And Coney is writing options on Coin. So in that process, they get greedy. They try to get a bigger number that fulfills their IV payment and each week, and they don't even have to worry about the synthetic. And so they go out 5%, right? And what happens sometimes is these stocks set and they move back and forth, and then when they want to run, they go up 13% in 2 days. So what does that do? And it doesn't matter if it's 13% in 2 days, it's the collective week, right, that these are in existence. Once you run by them, they get very expensive. Now, in fairness, the synthetic, yin and yang, the synthetic evens it out. But to get the accounting all straight, they have to sell. Remember that? You buy a stock, you think you got a bunch of profit. You don't have it until you sell it. Well, if something happens in the family, something happens to a relative, your children, your family, thank God that it doesn't. But if something happens and you need money, right, and you've got it in your stock account, then how are you going to get it unless you sell something? So it's no different, right? It's a paper profit until it's executed. And that's what these guys do. They're paying every month, right? They got to sell something. So they don't like to sell their treasuries because that's their collateral, right, to put the positions on. So the net result is 49.50. They ate it here. They ate their lunch. However, let me show you the other side. And then they went out and sold a new one. I don't particularly like putting it all in one bucket, right? They got $3.25. Now they went out to a 280. Let's look. I actually should give you guys the data here, right? So we closed at 257.08. I always just jump into what I call the real nitty gritty, but you know, this should be done. So they moved up 6 points, 257.08, 2.26%. Now, we didn't really move down 621. We reflected, only happens once a month, the reduction due to ex-dividend date, right? They took the $1.69 out that we were paid. And then you can always look at the math and say, okay, well, that's only 34, 44, 52. So we made up, you know, 17 cents. But that's why we show down. Now we'll go back and sync. Otherwise, it would make no sense. This goes up 2.26. We might have been capped and stayed flat. But we're not going to go down 6% when they go up 2 unless we had to pay a bunch of our assets out, which is exactly what they did. They went and put it outside the fund to pay everybody, right? So the only thing you haven't seen is you see the damage done on the calls. Let's go see rolling out and putting the new one in, right? So here's the 230. We come out here and we're going along. We had this 8.113 million loss, right, in May. Look at June, baby, 66 million. Because this is our close prices, right? Look at the 39 on here. We sold our 230, all of them, for $39, and we bought to close this. Now, somebody could say it's a day early, you could have got a little bit more money, but they really needed the cash, right? It's the easiest way I can say it. And so this difference of 133 gives you your 66,781. So the good news, we come over here to payments and we add two things, right? Oh, I didn't share with you the new position, right? So of this one is the 66, or sorry, this one is the 66,781. And then this one, let me show it to you. This is the new 260 strike. They purposely do these sometimes. They go out where they're a little bit right near it. If they do a 250, it's going to cost them more for the call than selling the put. But when they do it slightly under, they're going to make money. So they they buy a 260 call for $24 and they sell all at this quantity. This I don't have a problem with. Synthetics are completely different than, you know, spreading out or skewing your weeklies into a couple of strike prices. So that's the only problem I have. This is just normal, right? Now, as you get a little bit of buy-in to the fund, you do 50 or 100 or 200, you know, or however much cash you get in to add additional positions. But once they get past this thing, then they don't make as much. Look at this. So they sold this for 71. They sold a put for 71. They bought the call for 61. And so it's 9.58. Well, we get to add that to our 66, right? Two different strikes. We're done with the 230. Now we're in the 260. So hopefully this explains to you guys a little bit more. I'm trying to take my time to teach you. So we still have a big hit over here, right? Because this was today's, right? And this is where I start my new accounting and tracking this stuff. Share count did not go up, right? So we have a 161 loss, but even after that, right, we have more than, we have 76 here, so we have a net 33. Well, that's only $1.26 when you look how many shares. So in our piggy bank, we got $1.26 to spend, okay? We always like to see it in the short call, but it really shouldn't matter. The only time you miscalculate when it's a brand new fund or Ybit, and then they got a big liability, right? But these guys, this is not that big, right? This is a gain, and so it's a brand new month for them. So hey, Coney's starting fresh. No, it would have been better if they didn't take that loss additionally in this month on the weeklies. But we have all new weeklies, except we don't have any impact for tomorrow. So you can take if you're in Coney or a lot in Coney, you can take a deep breath knowing that you don't have it. It's all out there now in 614 and a 280. It's all hanging out there. Now it closed at 4 and we sold at 3.25, just to be fair. So we got 8.3. I don't worry about this with 6 more trading days. But just so you know, right? We sold it at 3.25 and it closed. And I think these guys know that this is moving, right? These things are moving. So this needs to be fixed, right? I got to go get the right numbers for this and just doing all of that. I'll do that for you guys. It's not a problem. So it's 75 cents. So we're a little bit behind, but nothing really to worry about at all. So I can go out and do it right now almost instantly. Go out to my June tab, put this number in there. So that's what we collected, right? So we're 23% behind the 8 ball. Not a big deal. We're not at 280. If this thing goes to 279, early, these numbers will all climb and it'll look like a huge loss. And if it stays at 279, we get to keep our whole 8.3 million. But that's how it works, just as a reminder. So not a big deal at this point. They did not add shares today. Misty added more shares. So, I saw in my comments, people always ask, is it better to do ex-dividend to buy? You're going to get it cheaper, but remember, you lost the dividend, right? So it depends. When the stock is really running, I say buy it whenever you think it's on sale, but you don't have to pick ex-dividend date. What if it goes on sale and really falls down 10 days before, payout or declaration? And it's cheap, buy it, right? DCA, buy it multiple times. Because it really doesn't work out. I intend to do a video on that to show you the comparison, buying it on declaration day and buying it after, and then track the money. Unless the payout is massive, or you're doing a volume where you're buying 20,000 shares or something, then that little fraction of a gain becomes more. Just FYI for you guys. It's sort of psychological. Why do we chase yield? Because we feel good when we get paid. If I said to you, hey, buy this stock, hold it for a month and it's going to double. But if I tell you, buy it and every 2 weeks it's going to pay, 20%, you get all excited about it. We all do. It's just sort of human nature. Okay, let me wrap this up and see if there's something else. So in our weeklies, I need to change these, right? This is all 25,685. But you see how and what I do when I do this stuff, right? These are now 280s. And this is 257.60. I think I updated this. No, I got to do it in June. So this is equal to June. There we go. Okay. And Coney. So what I want to show is we're 8.92% out of the money. Now, what about pre-market? Let's see. Let me go get that for you. Coin. Oh, look at, boy, we had some, let me show you real quick here for you guys. BTC volatility. Look at this. Flew up to 72,660. This is on 5 minutes, right? This is all pre-market, right? My time is 9:04, so we're 25 minutes from open. So it's up and then crash a little bit and coming back. You're going to see that kind of stuff on a 5 minute. Let's put in coin. So we can't get hurt anymore on the weeklies, guys. So all it did was, yesterday's close was up here at 257. So we went moving up to 260. I got a 232 that I really want to get called out. And I fully expect it to. Because I've written, as I mentioned to you guys, I've written about 5 weeks of about $32, right? And I sold a put and got $9 at 237.50. So then now that enables me to, I wrote some 240s and 237.50s and then finally wrote some 232s when it was around 227 just to get cash. And I'll take that money and probably put it in coin right now because I depleted and I really don't want to give up all those shares that I bought with Misty. So one of the ways I can do that is take the capital from selling coin. It's like I had my mini little cash cow on collecting yield. But I'm more nervous when I'm doing it than if the fund manager's doing it. And I've done it a lot of years, but so I think there's very little chance it would go down below 232. But I'm kind of just will use the cash and be a little more passive. I don't like to really day trade essentially anymore or have to watch it so close. All right, so we're looking good. Everything is running its course. Don't be afraid of Coney. Again, having $1.26 is cool. Look at this, we were hurting and they sort of bailed us out. Now we've actually got some money here. So not bad at all. Not too bad at all. Payment sync. Okay, I think that's what I got for you. I probably won't get YBIT or GDXY out until after the market and well after the market into the evening. So just FYI, you got all weekend. I got 1 or 2 more videos that I'm going to do over the weekend in general, plus get those out. And right now I'm going to go look at comments and catch up on comments. Okay, Bruce out. Not financial advice, not a financial advisor. This is for fun and entertainment. See you guys. Happy Friday, trading day, payday, and happy weekend. Advance happy weekend.